All right, we got Patrick Moraites here in the studio. So PEO Piper helping folks, helping business owners, helping the business owners focus more on their business, what they're great at, and then outsourcing, some of the HR functions of their business.
Outsourcing the functions that they didn't get in the business to do in the first place. So it's helpful to give a little description. PEO doesn't really stand for anything of any relevance. Professional employer organization.
Yeah, exactly.
That really doesn't define the relationship well enough. Another industry term is CoEmployer or employee leasing.
Okay.
But ultimately, what happens in the relationship is that the PEO becomes the administrative employer, and the business owner is known as the worksite employer. So as the worksite employer, you handle everything you're already accustomed to doing: hiring, firing, training, disciplining, managing, recruiting. All those daily activities you already do. The PEO is going to administer all the back end functions that you don't want to do, administering the payroll, administering the workers' comp coverage, administering benefits, fighting your work comp claims, fighting your state unemployment claims, things like that. So paying your taxes, so your payroll taxes, your state unemployment, your federal unemployment, all that minutia of back office burdens, they're gonna handle for you and take off your plate.
That's a good term for it. Back office burdens. I mean, it's really all it is.
It's ultimately what it is. It's not what people got in the business to do in the first place.
That's right.
Yeah.
So it helps. As a business owner, you get to a point where, hey, I'm scaling up. I brought on 12 people now. I've got 24 people. What's your magic number? What's your sweet spot?
So the industry average is 18 worksite employees.
Yep.
We can help companies as small as 1, and then our largest client has 4,000. So it's really determining for you as the business owner what's most important for you to let go of.
Yep.
And we help a lot of companies for a variety of reasons. It could be health driven. Some of what we're going to talk about today is work comp driven. Some organizations find themselves in that predicament where they've had what we call a shock loss, where an employee's gotten hurt and it's been catastrophic, hundreds of thousands of dollars or potentially even a death. So now they're faced with, not having coverage or having to go to what's called the JUA, or the Joint Underwriters Association, which is the state fund, in which case the cost of insurance is going to triple at minimum. So that could put them out of business.
Right.
So a PEO can help insulate that type of rate increase because of the deductible they have with their carrier.
Right. Yeah, and the idea of going to school, getting a degree, or not, going right into business, but
which I believe we're going to see more of that. We're going to see less people going to higher education, people going right into the workforce.
Yeah,
I believe.
But because of some of the social influencers that are saying don't go to college, or because the rising cost of college.
So I think the rising cost of college, one, and then what they're teaching.
Yeah, exactly. Yeah, it's the, if you look at the changes of the, the overall, the college education, how it's changed, how it's influenced, who's influenced it, why it's influenced it, and it's a lot of political behind the scenes of that. It really is. And I was listening to 1380 The Biz, I think it was the other day. They had mentioned that we have a severe shortage of welders in the state of Florida. We need 4,000 welders. We're going to be shy. I think it was 400,000 welders by the year 2020. So that's for infrastructure.
You'll see
that's
more
for
skilled. Skilled workers is what you're talking about. Without a doubt.
So a skilled worker meaning a welder, meaning a engineer,
electronics,
architects. Yeah, those types of people. Of course, we know nurses are in high demand.
Yeah.
Nurses and assisted living facilities. There's a lot of things. When you look at the macro where things are going, the baby boomers are still aging, and it's kind of and then you look at the migration trends of people. Lots of people moving to Florida. We need help with our infrastructure.
Without a doubt. And if you are someone that skips the higher education and goes right into business, that's where we do really well with startups. PEOs are great for startups, and it's important to get that infrastructure in place right at the beginning.
Yes.
So you don't have to worry about your payroll. You don't have to worry about your insurance coverage. Get that all out of the way so you can focus on driving that top line.
Yeah.
Because the magic word, or the magic 2 words, is cash flow.
Cash flow, baby.
He'll tell you.
Sales, cash flow. That's right.
Cash flow is king. So if you can stabilize your cash flow and make it predictable, so you know what your total burden is going to be, your cost per employee. That's extremely important, especially when you're getting into business.
Yeah. And also some of these changes, we've had employment lawyers on the show, we had immigration lawyers on the show, and these attorneys talk about if you don't have these documentations in proper order and they come in and they search your office, you are looking at some really big fines and potentially criminal charges. Is that right?
With the Department of Labor, especially with the I-9, if certain portions of the I-9 are not complete, and if they're not accurate, the fine's like $1,100 per line.
Wow,
that's insane.
That's that is almost to a point where it's punitive. I-9, it's like okay, I made a mistake. It's right. It's to a point where it's almost punitive.
But what we also see more commonly in our business is, especially when you're dealing with new companies that don't necessarily want to W-2 people just yet, so you get into that game of I'm 1099 and everyone. And if the Department of Labor finds out you're skipping out on payroll taxes and federal unemployment, and then the state finds out you're skipping out on state unemployment, it's far cheaper to pay those percentage points than it is to get caught and have to pay fines, fees, assessment, penalties, and everything else.
Pay the percentage points as a W-2 employee.
Yeah.
So what's the line here, Patrick? That is a good point. Patrick Moraites, the PEO Piper here on the Consumer Quarterback Show. PEO Advantage. Brandon Rhymes, your host here, the real estate quarterback. Tell us about, okay, if I'm hiring somebody, what's a telltale time? What are they going to look at? They're going to say, okay, you're 1099 or you're W-2. Give me my top
so
5.
A couple of the checkpoints are, are you telling them where to be and what time to be there?
Okay.
That's usually a checkbox.
That's a controlling employer saying you got to be here at a certain time. Right. Okay, I got it.
Are they wearing a Platinum MVP Realty shirt and being told where to be? Right. Those are probably your two biggest triggers of that person probably should be W-2'd versus 1099.
Yeah. And if they also have another job or other jobs that could contrare that aforementioned point.
Yeah, I mean, if they're, depending upon the industry, it is it is common. But I mean, you mentioned home health a little bit earlier. Yeah. A law went into place a couple years ago where RNs that work for home health agencies, they can work for multiple, but they're required to be W-2'd.
Okay. So
they're not allowed to be 1099 anymore. So I think you'll even see more of that. Down the road.
Got to be real careful. Got to protect yourself. If you're an employer out there, reach out. PEO Advantage. What's the website, Patrick?
www.peoadvantage.com.
PEOadvantage.com. And if you're watching our TV show version on Apple TV, Amazon, Roku, you can see the website here on the television screen. And Patrick Moraites, longtime friend of the program, and I've known him for a long time. He does a lot of charitable in the community as well. Children's Cancer Center, host a polo event, really cool stuff, getting involved with that. More from Patrick coming up. Top tips, nuggets of advice, parting words of wisdom. We're going to start over here with Fred Muth, Tampa Screens and Aluminum.
I'd like to echo on what we were talking about with William and financing. Now, in our industry, there's a lot of finance companies that come to us and they want me to offer financing to sell the enclosure. And they're very good companies. However, a lot of times I'll sit down with the homeowner and I'll disclose everything in there, as you do in a real estate transaction.
Right.
And by that time, they're apprehensive because there's a lot in there that's in the fine print. You know what I'm talking about.
Right.
So I have, in many cases, I've walked the customer directly to their bank with my estimate, and they'll just get what I call a signature loan. It's an unsecured loan because they already had the banking relationship. 3 days later, they had the money and they signed the job up with me.
Nice.
I like to throw that out there to the consumers because you can always, in most cases, do a very good deal with your local bank.
Yeah.
You've got that relationship already there.
Yeah.
And in any of our business transactions, everybody in the room should understand that. So I love the consumers to realize that is your best option.
Cool. Good stuff. Tampa Screens and Aluminum. Patrick Moraites, PEO Advantage.
All right. With respect to your workers' comp, if you're in that adverse situation where you have work comp claims frequency, or you've had that shock loss, or you're currently on the state fund or the JUA, we're a bridge for that to get you out of that situation, out of that circumstance, to help get you cleaned up, like the profit repairman will do for your credit.
Yeah.
We'll get your work comp cleaned up to where you can you can navigate back towards the standard market if that's something that you choose to do in the future.
Okay.
So that's important distinction to know about PEOs. The way they're able to do that is because PEOs we work with have anywhere from $100,000 to, in some cases, a $2 million per claim deductible on the work comp policy. So they're able to provide discounts and buy it at a lower rate, and then provide the support, the risk management, the training, the safety training, to help get you cleaned up and back on track. So that's a important tip for all the business owners out there to know where a PEO, an employee leasing company, can help you out with your risk management.
Risk management, I like that. Helping outsourcing your HR functions. William Crowley, the credit man.
Yeah, and so when I'm talking to people and on the show here, I think sometimes people get the wrong idea that I'm trying to encourage bad credit. No, we want you to become responsible, financially, fiscally responsible. At the same time, know your rights, okay? Because you could be throwing away a lot of money, just like the Tin Man was saying to Fred. Go down to your local bank. You have a good relationship there, because most of these industries, they're going to gouge you if you have any dings on your credit. They're going to make some money off of you,
right.
But I don't frown on them. It's business.
Capitalism.
So, capitalism. So get your credit straight so you won't be taken advantage of. But if anybody's being taken advantage of, is you doing it to yourself. Yeah. Because you can clean up your credit and then start paying your debts on time.
That's right.
I'm adamant about that. Don't be some deadbeat out there, just not doing anything and expect to come to me to clean you up. I will do it though.
Take care of you though.
For the right price.
Yeah. There you go. All right. So we're going to offer that credit package. Don't let me forget to get that in. Right. Well, actually, let's go ahead and do it now since we're on topic. So for the first 3 listeners, if you want to have William Crowley send you his credit package, he's got a credit package that he'll put together for you. It's going to teach you how to opt out of pre-screening, cut off all that junk mail coming to your mailbox. It's going to teach you how to get an actual credit report every year for free, not one of these commercials where they're jumping around, strumming guitars, talking about giving you a credit card. They're also going to help you with an actual sit-down consultation as well. So the free credit package for the first 3 listeners who text the word credit to our consumer advocate hotline. Text credit to 813-670-7372. All you have to do is text the word credit to our consumer advocate hotline, 813-670-7372. And we're going to hook you up with that credit package, compliments of William Crowley, the credit magician.
He's texting it right there, over there.
Oh, no.
We got calling it already.
There we go. Already over there.
All right, so
in studio.
For my lightning round, what I want to do is talk about, I just taught some really cool negotiation strategies based on this book. Chris Voss is the author. Awesome. He's going to be on our show soon. But did you know that there's actually 3 types of yeses? Okay, there's a counterfeit yes, there's a confirmation yes, and there's a commitment yes. Okay, so when you're in sales, this is important, right? So a counterfeit yes, we've all heard it. It's kind of like you're rushing out the door, or, I'll do that. Yeah, sure, yeah, no problem. Hey, would you donate to this? Would you do that? Yeah, sure, no problem. Just send me the email, right? So that's a counterfeit yes. You know it's fake, but a lot of times those counterfeit yeses are strategic. What they're doing is they're delaying for more information. They're just kind of stringing you along so they can try to figure out maybe some of your trade secrets. Maybe they want to know what you're doing that other companies aren't. Okay, so that's the counterfeit yes. You got to be able to spot these yeses. So 3 types of yes. Number 2, you got a confirmation yes. It's very innocent. It's reflexive. Yes, it's just a quick yes with no commitment to action. Okay, what we want as salespeople, we want that commitment yes. We want the one that says yes in a way that I'm going to sign the contract. I'm going to move forward with the deal. Now, what you want to do is also, once you get that commitment yes, you want to utilize the rule of 3. Okay, so the rule of 3 is where you reword what they just said back to you so that they repeat yes 3 different times. So you're going to just recommit them to that yes that they just gave you. So you might say something like, oh, well, we're looking forward to having you as a client. Would you have that contract into us by later today? Great. And then you might reword it again. Is there, we're so happy to have, you want to reword that 3 different ways, and that's the rule of 3. So those are 3 types of yeses. Be careful not to be fooled in accepting a cheap counterfeit yes or even a confirmation yes. You want the commitment yes. That's what you want. All right, so good stuff here on the Consumer Quarterback Show. Fred Muth, the Tin Man, Tampa Screens and Aluminum.
Can we go another hour? We had such a good time.
We had so much fun.
On.
We should just tell them.
We can do another
let's
hour.
Let's just bump to the 6 o'clock show today and put us there. We should just roll us over. Patrick Moraites.
I don't know if everyone can handle another full hour of the credit.
No, they can.
They can do it. They really could. So shout out to all of our expert contributors here in studio, Tampa Screens and Aluminum, PEO Advantage, and William Crowley, the Credit Magician. Thanks so much. Of course, all of our listeners, our viewers out there, our team behind the scenes putting the show together, all of our producers, we really appreciate you for tuning in. Make sure you follow us online at Brandon Rhymes 1 on Instagram and Twitter, the Real Estate Quarterback Show, Consumer Quarterback Show pages as well, and hit us up on LinkedIn. We'd love to connect with you on LinkedIn, Brandon Rhymes PA. And we want you to please go out there and consider committing a random act of kindness. Pack up some food or clothing, carry it with you to and from your commute, hand it to that person that you see in need, and be a force for good in the community. We'll see you next time. Consumer Quarterback Show, consumerqb.com.
You've been listening to The Consumer Quarterback, Brandon Rhymes. Whether it's real estate, consumer, or financial advice, let Brandon call your next play. Contact Brandon Rhymes at 813-670-7372. That's 813-670-7372. Online at consumerqb.com. And join us next time for the Consumer Quarterback Show, weekday afternoons at 5 on AM 1380. The Biz.